So it's been an exciting year in the cannabis sector. So cannabis companies have experienced tremendous growth in sales and revenue, despite volatility in marijuana stocks, as well as legislative uncertainty. So we have Aaron Miles here with us today to provide some best practices. Aaron is Chief Investment Officer of Verano, and Verano is a vertically integrated multi-state operator. Hey, Aaron, how's it going?
Good. Thanks for having me on today, Dwayne.
Excellent, excellent. We're glad you could join us. So, Aaron, Verano's been very busy in 2021 and 2022. So can you tell us some of your growth priorities over the next 1.5 years?
I think understatement busy is probably an understatement there, Dwayne. Going public and, we racked off 16 acquisitions over the course of the last year. Tomorrow technically is our 1-year trading anniversary as well. But we had a very strategic plan in place before we went public, and it was to close on the AltMed acquisition, which gave us entrance into Florida and access into the Arizona market. And it also was in conjunction with going public. And then we had a blueprint after that of what states we wanted to go deeper in. So that included, Pennsylvania, that included acquisitions in Arizona and Nevada, acquisitions in Connecticut and New York, and we can kind of get into a little bit more detail as we talk, more specific acquisitions. But we wanted to build our footprint to be vertically integrated in limited license states, and then remain flexible enough as market growth and opportunities presented itself that we could take advantage of those. So for the last year, the growth priorities have been really focusing in on the near term limited license structured states, getting a deeper presence in those markets, grabbing market share, and really enhancing our operations. Going into 22, we haven't slowed down on the M&A front. So New York is going to be a part of that. Minnesota, New Mexico, getting those states integrated into our model once we get the deal closed through goodness growth. But, it's also making sure that our operations are up to speed and up to par, because, our MO from day one has always been premium quality product. And quality and quantity matching itself going forward. So making sure that as these markets and these states scale and develop stronger programs, that we're in a position to make sure that the amount of product we're putting into the market is going to meet the demand, but that the quality also meets the standard that Verano has set early on. So, we're really excited about what we're accomplishing. We still think that we're in the early innings, though, because there's a lot that we can get done in this space.
Right. And looking at scaling into other states and other markets, regarding SAFE, so if cannabis banking is legalized, so SAFE or some other bank-focused legislation, what would that allow you to do now that basically then that you can't do now?
SAFE can mean multiple things for us as an organization, and I think it's going to be more of a stepped approach once SAFE gets passed. I think initially it will give us access to credit cards. So that basket sizes have historically gone up once credit cards start to get involved. But from an operational perspective, we can start to bank at the federal level, which means, the 100 state charter bank accounts, and we have to maintain, covenants and in each state that we operate in. It's going to ease a lot of the financial burden we have by having to operate so many different bank accounts. We'll actually be able to bank at the federal level. If 280E gets addressed, which is, as the tax code that the U.S. government put in place, where we basically can't write off our SG&A expenses, we're in theory paying about 10% more in taxes than we should, just given this 280E tax code. So that going away, you're just going to see more profit fall to the bottom line, which gives us a stronger ability, because we are free cash flow positive, to be able to reinvest those dollars back into our footprint and expand our operations and our capacity. So, so SAFE, just from that basic perspective, could be game changing for us. Now, what we're really excited about, and this is what we'll have to get more clarity on from the government, what U.S. institutions can start to do business with us. So can we do a tried and true credit facility, mid-single digits, hundreds of millions of dollars? It's on the radar, but they can't do business with us right now, the BofAs of the world. And then what about uplisting the U.S. exchanges? We're on the Canadian Securities Exchange. We've been very appreciative of them allowing us, for the inclusion into the market to be able to use our stock as currency. But we want to trade as efficiently as we can. And you talked about the volatility, right? And in your opening statement about the cannabis space, that is twofold. We're heavy retail traded. We're also not on a very efficient exchange. And so when you start to get more institutional dollars in, which SAFE could potentially address, and you layer in that inclusion of uplisting, it could be game changing for our stock. So I think from a SAFE perspective, that's really where our focus is in on. And then, the biggest piece to SAFE, which is the most important piece, is the whole, what does it do for social equity applicants? Because, when you think about like the Illinois market, they're going to be issuing 185 dispensary licenses that are focused on social equity applicants. You can't have individuals do business the same way we did in 2014, where you're reaching into the couch cushions looking for change, trying to figure out when can you buy a light bulb for your front door, right? And so, when you think about the whole social equity component, you need to level the playing field and give, individuals access to real banking so they can grow their business appropriately.
Okay. Yeah, and looking at, I guess, New York, because there's been a lot of focus on New York in terms of it being, well, obviously a large and demand market. So why is it worth paying for a legacy New York license instead of, waiting to go through the eventual application process?
It's a question we struggled with internally, right? Or not struggle, that's probably the wrong word to use, that we contemplated internally, where, 2018, I was part of a different MSO at the time, and they went through a New York acquisition, and they made the decision at the time that New York was going to be, play a very critical role in the portfolio. Verano took a different stance where we wanted to take more of a wait and see approach. We knew the New York market was going to take a while to develop, especially from an adult use perspective. I know Cuomo back in the day wanted to roll legalization into his, April budget, and potentially, it was supposed to be in 2019, and then by 2020, rec was supposed to be turned on. Well, fast forward 2 years, here we are still sitting with a very inefficient medical market. So we took a wait and see approach, and we wanted to see what the adult use program was going to look like. And we have, more visibility into that now. And then so you make a decision like, okay, we want to transact in New York. What are our options? You either buy a legacy asset, like you referenced, or you go down the application route. And if you look at the way New Jersey rolled out, we won one of the 9 additional or initial licenses that were issued in the state. Then they did the whole second licensing round, and it went more to social equity applicants. So a lot of the MSOs that were shut out in that first round thought, oh, well, no brainer, let's get, in the second round. And it didn't necessarily happen. So to kind of hedge some of the risks and to get us into the New York market, we said, application process, licensing might be available, but we don't want to take that chance. We want to transact in New York now. The timing is right in our mind, where we're ahead of adult use turning on in the state. It gives us time to, get the deal closed and then really ramp up the assets to the Verano standard. And then it also is ahead of SAFE. I mean, go back to, what could SAFE mean? If we get inclusion into the US capital markets and institutional dollars come in, these valuations, could run wild. So we thought it was the right time to transact. We're very happy with the legacy assets that, Goodness Growth were able to put together. And it also gives us multiple states through one transaction. So it wasn't just a New York transaction. It also gave us Minnesota, New Mexico, and optionality in Massachusetts as well.
Okay, excellent. So looking at different cannabis formats, so what 3 are your main focus, and then how do you think they're going to change over the next couple of years?
So three of the main focus areas that, I think, operations are always number one. You can have a great footprint, and one of the big things that we're trying to highlight to the community, the industry and the cannabis community is how well our operations are run. So I think it's making sure that we're buttoned up from that perspective. And I mentioned this earlier, where as market growth continues to come online, as states continue to develop, that we're not playing catch up, that we're, a couple steps ahead of that with, the quantity and quality of product coming to the market. So I think operations are always going to be the main focus, because if you're not putting out quality product, you're just going to fail as a business. I think product, branding, marketing, and form factors are also under evaluation, because, right now it was, 2014, 2015, the program turned on in Illinois, and it's like you could put cannabis in a shoebox and duct tape it and write the strain on there. And it was like, if it was a good product, it sold. And, so now we're at a point where I think branding is starting to become more relevant. So we're going through a revamp of our website. We're developing an app. We're looking at different form factors. So, the way that we develop our product portfolio isn't, necessarily trying to figure out what the market wants. It's soliciting feedback and then implementing those into our portfolio. So product development is there. New form factors, could be a beverage. Those types of things are under evaluation. And then I think the most critical component is really, how do you develop your footprint, right? Because there's only going to be so many limited vertically integrated states that you can operate in, and we will continue to maximize our presence in those states. But what does the fragmented states look like? What does a Colorado or California look like? What does legalization in the US look like? So what we try to do is remain nimble enough. And prior to the Goodness Growth acquisition, we had no sale leasebacks, which gave us flexibility to really transform our business model. If an interstate ever popped up, we would be able to transform our business model pretty quickly. But so I think we're going to look to see how the markets develop, what pieces we want to add, and then I think far down the line, it's like, what does the international component look like? We're very early stages. I would liken the international opportunity more to like how we looked at New York, where it's like it's of interest. And I think you're starting to see some movement and there's some talk around international components. So we'll kind of take a wait and see approach to see how we do, develop from an international perspective. But near term, there's just too many opportunities that we can invest in now.
Right. And as you look at branding, as branding is going to take more of a focus over time, is it likely that you're going to pare down some of your brands over time for the Verano profile? And then what's going to be the main metric that you decide on whether to keep or kill a brand?
It's so branding, we're not going to develop every product. And I am a huge fan when you go into a restaurant and they have kind of limited options. It helps you make selections a little bit easier. You don't need to have every option available. So I think from a product perspective, we're already focused in on what's selling well. We obviously look at a lot of financial metrics about top line sales, what are the profitability behind a lot of the products that we're putting into market, and how much does it cost to produce? I mean, you look at vape extractions, and then you have ethanol versus CO2 versus butane, and there's different cost profiles for each one. How do you leverage ethanol over CO2? That's what we're really starting to evaluate is even the granularity of what products we're going to put out to the market. But I would say we will scale back in certain areas, but then we're also looking to expand and expand in the sense of premium flower. That's the only tier that we've ever operated on. But do you launch an ultra premium? Do you launch a mid tier? We're going to start looking at different levels of products within each product category as well. So I would say I think we're really happy with where our product portfolio is at. I think it expands from here, and I think our branding will always just be in line with kind of the look and vibe and the feel of the product we're trying to get out into market.
Excellent. And what metrics should investors be looking at in order to judge if Verano is executing its plan?
We've always been a margin story. I mean, top line, we know we have the growth drivers there, and we could buy as much top line as we could to be the number one player in the market. We feel that we're going to be very relevant from a top 2-3 perspective on a top line basis, but the margin profile that we've developed is what sets us apart. We've been profitable since inception. While other companies were carving out a pathway to profitability, we were leveraging cash flow to invest that back into our business to grow our portfolio. So the metrics I would look at, we've guided to low 40s from an adjusted EBITDA margin perspective, which is industry leading. So how efficiently are we running the business? Look at our SG&A. We generally like to run that between 20 and 25% of revenue. Revenue speaks for itself, obviously, but I would say that margin profile is really what I would keep people focused in on, because when we talk about these new states coming online, we talk about even growth in Illinois with 185 dispensaries coming online. We want investors to make that natural assumption that a lot of that is going to fall to the bottom line. So I would say from a margin perspective, it's what people should focus in on. Also look at how much cash we're producing. We self-fund CapEx and we still produce free cash flow. So it was unheard of in the industry for a while. There are, competitors of ours that are playing catch up from a, cash flow perspective, but we've always had the luxury of investing that back into our business. So from a cash flow perspective, you're going to want, as an investor, you're going to want us to run that as close to zero as we can, get that to, because that means we're investing all those dollars back into the business. So I would say those are the metrics that I would be looking at.
Okay, excellent. Thanks for joining us, Aaron. You gave us a very good perspective on your business and then what's headed for you in 2022 and beyond. So yeah, we definitely appreciate you joining us.
Great. Thanks for having me, Dwayne.